Morning, everybody. It's Monday, April 22nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn up a quarter at 433 3/4. May soybeans were down 4 1/4 at 1146 1/4, and May Chicago wheat was up 9 1/4 at 559 1/2. No export sales announcements here this morning, so pretty slow on the overall news front. Good morning, guys. I know we had a pretty good conversation here just a few minutes ago, just on some of these spreads, fair values. I know there's a lot of chatter on the socials, in the last couple of days about weather and premiums being, whether it's in the market or hasn't been factored in. So I think it's a fair discussion. So I'll kick it off with Ben. I know you had a few comments to make, and then we can kind of piggyback off of that.
Yeah, I think the general mindset here is that we're hearing a lot of chitter chatter, whether it be from commercial, talking heads, etc., about weather premium in the markets and taking it out if it comes quickly. And I think it's a really tough correlation to imply that there is or isn't weather premium in the market when we're looking at on the knowns of the cash market trading, pretty close to board price to overs across the country, and then looking at the July D spread at 25 cents, where Dustin mentioned that it's really only reflecting interest at this point, not even the board charge for storage. So I think it's a really, sometimes we try to connect dots in places where maybe dots shouldn't be connected, and the conviction with which people talk about these things, I think, is kind of on shaky ground. And then Jason brought up a phenomenal point that, where do we think that December corn goes with a good crop? And, that probably implies taking out all the carry and maybe putting us back towards where we traded on the low end of the range when we rolled from March to May. So I think that sometimes a little humility in what pricing is and what it can do from how far we've gone, entering into a period of uncertainty, and we're straddling two, I think, very different beasts with old crop corn, which is defined at this point, defined on supply, we define demand, and the uncertainty that goes into what new crop is, especially with the spread at 25 cents. So I don't want to take the other side of this, because my conviction is to have some humility with what markets can do over the next 8 to 12 weeks, as opposed to this just going to be mechanically sucking out the carries, the whatever you want to call it. But I think you have to be careful about being so sure about anything in these markets at this time of the year.
Oh, that's a fantastic point. Dustin, anything to add on that? Just in a sense, we're going to get a crop progress number again here this afternoon. It'll be 3 o'clock Central. Things I'm looking at here this morning, we should see a pretty good jump in certain areas. And I think in the next 2 weeks, it's a toss up, but I still think progress continues to be made. So, I don't think you sound the alarms that this is a 2019 or some kind of scenario like that. Would you agree?
Yeah, I agree with that. I think the one thing with 2019, similar to this year, was that funds were very short and pushing prices quite low coming into the planting window, right? If we had a good crop that year, the acres that we should have had, then the funds were ready to be record short at that time. They're doing the same thing right now, that they're maintaining a very large net short corn position. And a lot of what's changed from last November until now has been hedge fund, positioning. They decided to get very, very short. That's their short leg of the commodity complex, corn and soybeans. And, so I agree with Ben, this is not typically the time frame that we would, be worried about, as long as we get it planted, they're going to take all this premium right out of the market. I don't think the market generally has weather premium for the planting window, especially nowadays, right? anyone that's bidding up the price of corn just because there's the chance that it might be another 2019, I would just be very surprised that that would be the overall average market participants trading it that way. You know, when you look at a 30 or 40-year seasonal, you're typically your high comes in late May, early June, because you know you're really not certain what you're going to get for that summer pollination window yet by those dates. That's really what changes and shapes markets is its pollination window. Whether, you know, is it dry coming in? Are we going to see a little bit extra heat? That can make or break a 5 or 10% trendline yield cut. And at 90 million acres of corn, it's not a slam dunk that we're necessarily going to have another sizable carryout at today's price. So, you know, to Ben's point about the interest comment, I think at an 8% interest rate, you're talking, you know, 18 of that 24-cent carry from July to Dece is pure interest. You know, if you think of it in those terms. So if we're talking about another 2.2 to 2.4 billion bushel carryout projected for 25, assuming, you know, normal yields, you know, maybe a slight reduction in yield could still give us that type of a carryout at 90 million acres of corn. You know, weather premium would still put us where the front end of the market is. I don't think that, you know, differentiating between carry and weather premium is definitely a hard one, to your point, Ben. But I do think that you have to think people are usually not putting in a seasonal high in late May, early June because it didn't get planted. It's because they're worried about pollination window.
It's a polarizing topic. Jace, what you got a couple thoughts on this too? I know we were talking earlier this morning.
Yeah, no, I agree with everything Ben and Dustin were saying. Kind of piggybacking on Ben's comments, right? Like, you know, I brought this up earlier, obviously before we jumped on here. You know, where's corn going to be at harvest with a trendline corn yield without anything else changing? And I think everybody agrees it's going to be quite a bit lower than 470 corn. And I think to Ben's point too, right? Like that's a long way to go before we see that. So there is some sort of premium in the market, and there always typically is, and you would hope so this early in the year. But it is, you know, probably much less than we see in a normal year, because the funds are so short, because the market sentiment is so bearish too. I think that's a big key, right? You know, it's kind of bearish until proven wrong, or, you know, and we do this in bull markets too, right? So if we were in a bull market right now, we probably would be having these kind of moves, a lot more volatility on planting weather, right? Because any kind of perceived problem is much quicker, you know, priced, you know, and there's just a lot more anxiety in a bull market, and any kind of little hiccup in a bear market's just kind of shrugged off. So that's the kind of market we're in, I think. And I think Ben's point is, you know, to completely discount what these markets can do when everybody is shrugging things off, I think is kind of the point. Is people can get caught with their pants down type of thing. Now, right now, I think Dustin's point is true. It's like, are we really going to get really excited about some planting delays when, you know, it's historically, or, you know, typically we're going to get it planted, and every year is new technology with high-speed planters and all these things. We can just get the crop in the ground so quick. So no, that'd be my only comments.
Yeah, I mean, it's a great point, Jace. National crop can go in a couple weeks, you know, so you get a brief window, and these guys are going to rock and roll.
Yeah, you know, and like 2012 is, I think about all the time, right? And we went through that, and it was, you know, all the dryness and it was just discounted because we were kind of coming off this bear market. We were kind of thinking we were going to have this big crop. The crop looked great, and it was kind of the end of a cycle, I would say. If it would have rained, right? If it would have rained in 2012 when it needed to, you know, that we would have never probably had that extended bull market.
Yeah, that was a record crop.
Yeah, you know, it was. And then, you know, so the market sentiment was, oh, it's going to rain, it's going to rain, it's going to rain. We got plenty of acres, blah, blah, blah. And then it didn't, and then kind of blew up. So there's always that.
Justin, I got a question for you. Not to get off track, but with, you know, the outside markets being so volatile, crude or gold's down 60. Are they long a bunch of gold?
Yeah,
Traders. I just was curious. I was just looking at outside.
more than you normally see at this time. Yeah.
Oh, okay.
It's certainly been an interesting trade. The outsides have been whipping.
We've seen May, July come in from 14 into 8.5. I think that when we get into delivery, I think this gets to be a little bit of an interesting thing to watch. Is this a canary in the coal mine that we've, the cash markets and the front end has done enough damage to not have that really super weak first notice day that we saw going from Dec to March and March to May. So everything is fun and games until you get to delivery, and I think that's going to be one of your real signs of maybe some of the potential that we can have in these markets. Not that it's going to get away from us with the amount of supply that we have at the moment, but maybe for the second, some of that grower pressure will have been accounted for. And we've discussed on previous war rooms that just by the calendar alone, using 1 billion bushels of corn a month, that some of that should be reduced by now. So, I was talking with Justin about this the other day, and a trade like this works until it doesn't work. And I think my question is this the time where it doesn't work, where we don't see a real widening of spreads in the front end once it gets a delivery, or if it continues on with the same sort of pressure that we've seen the previous 2-3 rolls.
That's a really good point there, Ben, to make, and that's going to materialize here real soon. We got a week and 2 days, right?
Yep.
Till first notice.
We did in the last one. We did bottom out 2 days before we actually got to first notice day. So you start to see if a trade like this is maybe a little bit oversubscribed, or maybe it's not, and you won't know until you get there.
Oh, very good. We got a couple minutes as we come into the open here. Ryland Friday cattle on feed report, on feed up a 1.5%, kind of looking for 2%. Placements down 12.3% year over year, and marketing's down 13.7%. So I think initial opinion was maybe slightly friendly, but I'd love to hear what your thoughts are after we saw that report.
Yeah, and I think the 2 less marketing days in March and definitely kind of, I think the market was expecting some pretty low numbers just for that sheer fact. But this was a historically low placement number, and the fact that it wasn't a bearish surprise. We could see the market get a little bit whooped up here this morning. So I think all eyes are on it. I don't think it was super bullish because the market was anticipating quite a bit of this, but we were well outside of the range. The marketing number being quite a bit lower as well. I think a lot of that pretty much has to do with kind of that sluggish pace of slaughter that we've been talking about. So I don't think there was anything too surprising here. I mean, maybe we get the back end of the market to firm up a bit. But overall, the placements and marketings kind of went down when they typically go up, So, I mean, I think this is something to keep an eye on. I think this does help strengthen the back end of the market, but we did see some of the bigger placement numbers that were increasing, month over month, or excuse me, year over year, were in the South. So we expect that the exports are once again still kind of leading this charge, kind of filling the gap with the current tight U.S. supply. So I think that's still going to be the bigger focus kind of longer term is, how much we're actually importing from Canada and Mexico to kind of alleviate some of the supply constraints that we're seeing. But prices are still holding up relatively well. We've kind of been firming up into this report. So I think the market was trying to sniff out maybe that we could see a little bit tighter numbers here.
Oh, it's good. And you mentioned maybe firming up in the back. It's probably good to be real cognizant and start looking at those out forward LRPs, right? Some
Absolutely.
of those will start opening up and you can get some pretty good levels in place.
it's a good bang for the buck when it comes to risk management. You know, it just makes things pretty easy. It gives you a nice floor under the market here. I mean, we're at a historically high price, and as we've seen, we've had some really sharp declines here. The market typically will find its way back to some degree, but like we are kind of in this zone right now, which is once we get past September, you know, or kind of the late summer, you know, having a little bit of extra protection in this kind of situation, I don't think is really going to hurt anybody that much. Personally, that's my opinion.
Oh, very good. We'll see how we shake out here today. We just opened up. I know feeders are up almost $3 and fats are up $1.80. So it's a good start to the morning. Grain markets also just opening. May corn up 2 1/4, 435.5 is the last. May soybeans down 4, 1146.5, and May Chicago wheat's up 12 3/4 right now at 563 1/4. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central. Good conversation here this morning, guys. Thanks for all the input. Hope everybody has a good start to the week, and we look forward to talking tomorrow morning. Have a great day.
Thanks, Dan.